You know, when you hear business and financial terms that can sound very similar but actually be quite distinct from each other, that's some of the reason why it can be really frustrating in hearing business terms. Well, let me give you some that people can get confused with. There's market capitalization or market cap, and there's market share. Well, they sound really similar, but they're actually very, very distinct concepts. Let me describe each one of those to you. Now, market share. Market share is what a company looks at to determine when it looks at the broader market it's trying to address or trying to serve. And what is the size of that market that the collective kind of purchasing of customers are willing to spend in that market? That's the market size, sometimes referred to as total addressable market or TAM. Well, that's the size of the market. Market share is how much of that a company in and of itself owns of that kind of collective market size. How much of its customers buys from them in relative terms to what the entire market spends on this. So you might have 30% market share, meaning out of all of the buying that happens in that category, the customers of one company are spending only about a third of the total collective on that one company. So the company then has 30% market share in their products and solutions that they offer to that broader market. So market capitalization is quite different. It's in the mind from a shareholder's perspective. Market capitalization is the collective value the world has kind of determined on what a company's value is, what it's worth. And how they determine that is just a simple calculation. It's the stock price it's currently being traded at times the amount of shares that are owned by shareholders globally. So it's stock price times the amount of shares. And it is the collective value that everyone has then has determined is the value of that company, market capitalization. Then market capitalization can go up and down a lot based on what is the future estimates of how that company is going to perform. Is the future going to be better than the past? And if the future is going to be better than the past, then you'll get more buyers than sellers of a stock, and that'll drive it up. But if there's a lot of concerns, it's not generating good cash flow, or its profitability is starting to shrink, or its sales growth is starting to slow, well, then the shareholders are looking at, well, the future is not better than the past, so maybe they take their money and go somewhere else. And that starts to reduce the market value of the company or the market capitalization of that company. So market cap and market share both really matter. Market capitalization through the lens of a shareholder, market share through the lens of customers and the company being able to deliver value to those customers. Hoping that was a helpful explanation between market cap and market share.